Steve Leisman has the headlines. Waller's talking about artificial intelligence. Artificial intelligence isn't pretending to be Waller, right? That's what you meant?
I don't think we can know, Joe. It could well be that it's all an AI speech, right?
Yeah.
But maybe, he's not making much comment on monetary policy, but I think the importance here is to think about how much the Fed is thinking about this, that now Waller is giving a whole speech on it. It's been like a quarter to a third of all Fed speak to this point. And what the Fed governor says is that policymakers should let the disruption of AI occur and trust that, as in the history of technology, that the long-run benefits will eventually exceed the cost. He says history shows new technology leads to growth and to greater employment, and that capital and labor are complements, not substitutes. He says the challenge for policymakers is to help workers and firms adjust so that the efficiency gains translate into higher wages and higher growth. With innovation, he points out this issue of a time inconsistency. You get the cost first, and the benefits come along with the disruptions, and the benefits take time. It's easier, he says, to see the jobs destroyed, but harder to see and forecast what jobs will be created. He points out no one would have seen, for example, the rise of a job called influencer when TikTok came along. AI-related job loss so far, what he's seen, is mostly being handled through attrition, with very few businesses saying that they're laying people off because of it. And it's also being used to retrain employees. Layoffs are expected to increase because of AI, especially, he points out, for workers with college degrees. Quote, there will surely be winners and losers from AI, the Fed governor says. He's hoping it delivers greater productivity. That's a big thing for the Fed. If you get it, the Fed can run at a lower rate. But he does point out some stuff that you talked about, Joe. Fraud, disinformation, bias, and cybersecurity. These are potential threats from AI. And then an interesting thing, kind of stepping out of his lane, talking about AI regulation, he says the U.S. approach of letting the technology develop and then figuring out regulations later is superior to Europe and Europeans regulating first. And he points out that's the reason why the U.S. led Europe when it came to the technological boom in the 90s. Finally, Joe, there's a Barclays report out there that says AI investment may actually have peaked in the first half. One other thing out there, which is that Myron, the other Fed governor, is saying that the neutral rate could be higher because of capital investment from AI. Joe?
Steve, I don't remember whether you were part of it, but last time that the Fed chair was going to speak, we said, what should he say? We asked AI, and it was beautiful. It was indistinguishable from what the chairman eventually did say.
Joe, people don't know this, but large language models have been employed to discern and figure out and dissect Fed speak, I want to say, for almost 10 years. I think LLMs have been involved in figuring out Fed speak longer than almost any other area of the market. So this is not something new, that Fed speak is part of AI, and that AI is being used in this regard. It's something that you got to watch for. I'm struck by how much the Fed is talking about this. Okay. What I've not heard, and what I was hoping for a little bit in this speech but didn't hear, was how AI is going to influence monetary policy. If you get this big investment, this big productivity boom, that's going to change the outlook for the long-run rate. It's going to change even short-term rates.